I think the most important thing for us is trying to work out what is normalisation after the pandemic and what is a real downturn. I think for the last year we've seen elements of a real downturn. It should be no surprise to anyone really that you see unemployment going up to 5%. The redundancy data is particularly stark. Redundancies up by about 30% by comparison to this time last year. All of that is about businesses adjusting to a higher cost base. Yes, the NI rise obviously earlier this year, payroll taxes going up, but also other taxes and higher inflation generally. More recently, maybe just a little bit more hope. The vacancy numbers have been dropping for 2 or 3 years. They've stabilised in the last couple of months at just below the pre-pandemic level. So, and a lot of what we're getting back from recruitment businesses across the country was there was a little bit of a turn in sentiment at the beginning of September. Maybe people had played through their adaptation to all these rising costs. So now, as you say, they're looking nervously to the budget because they had an experience last year where the October budget, the Halloween fright, scared the market and slowed down hiring. They really want the Chancellor not to kill it this year.
And we want to get your views on the budget. Before we get there, just in terms of the mixed nature of this data then, what are you seeing across the economy, the different sectors? Where is the pain most acute? Where is there more resilience?
Labour-intensive sectors have seen by far the most pain all year. That's true again in this sector. So you're looking at retail, you're looking at hospitality. We have a lot of very high labour costs, very much affected by the national insurance increase and affected by slowing consumer spending, as Caroline said a minute ago. Interesting one that took me slightly by surprise this morning is information and communication. So tech is not quite there yet. Companies are spending on tech, but they're spending on very specific verticals rather than more broadly in tech development. And I think we'll know there's a real bounce coming when we start to see that turn. We've certainly seen construction though start to turn in the last couple of months, and anything in logistics turn positive, and anything in logistics looks pretty positive as well.
Okay, in terms of the budget, you and I think quite representative of a lot of what business has said, you want more focus on not increasing business taxes and on trying to work on economic growth and trying to build skills and training programs, basically support for workforce participation. What do you want to see in the budget? Because the Chancellor has given ever stronger hints that there will be tax increases and potentially that would include payroll taxes.
Well, I think the most important thing is if there are tax rises in the budget, we leave payroll taxes alone. The Chancellor took a swinging swipe at national insurance last year, not just in increasing the rate, but in reducing the threshold, which is one of the reasons why we see so much pain coming from hospitality, retail sectors, where the threshold had a particular effect because wages on average tend to be lower. I think if there are to be tax rises, if they're for business, they have to come on profit, not on activity, because that will move things forward. Away from taxes, let's be clear, the public sector productivity data is an absolute mire. Every pound we spend in the public sector, we are getting less from every year than we got before the pandemic. There has to be some form of progress on what we get for our tax money. I think businesses quite reasonably want to see a willingness to tackle rising costs. We talk about doing more with less in business. You can't do less with more, which has been the story in the public sector for the last couple of years.
Just going back to your point about payroll taxes and really wanting to avoid that in the budget, if that does come through, and if that's where the Chancellor goes on November the 26th, is this the government that can really claim still to be pro-business?
I don't think you could. I think broadly businesses gave a very clear message of what would happen if you changed employers' NI last year, and we do think that was a breach of the manifesto commitment then. Those things have happened. You talk to my colleagues at UK Hospitality, they're talking north of 100,000 jobs lost in hospitality since this time last year. So there are particular things that have come forward. For instance, the changing of rules on pensions contributions. Businesses need the government to be thinking about second order effects. Ending salary sacrifice for pensions is punishing good employers who are doing the right thing and encouraging employers to outsource more of their longevity risk onto the Treasury. it's self-defeating. So I think more thought about second-order effects in the budget and more focus on the long term, because I think if you look at the gilt markets, gilt markets care less about the profit and loss account for 25-26 than they do about the long-term position of them of the fiscal picture going out to 2030-2035.
Okay. I mean, it's the pension contributions that look to be, one of the big changes that could come, but also on income tax, that there could just simply be an income tax increase for workers. Would that satisfy you?
I don't think anyone would be satisfied with an income tax increase, but what I would say, I tend to agree with the consensus of most economists that if you need to raise taxes, you should stop fiddling around the edges and trying to find things that people might not notice and actually go in through the front door.
Okay. Lastly, very briefly, a word also on 1 million 16 to 24-year-olds not in employment, education or training in the UK. The government's got to do something about that, surely. That would be a measure that you would want to see?
Well, those numbers have been moving glacially slow. We made no progress on inactivity really over the last year. And the truth is, you get people out of inactivity by getting them into work. They need an employer. The story is always the same in labour market slowdowns. It's the young, the lesser skilled, the lower paid who suffer most. So a lot of the wages of the NI decision are actually hitting that very group, encouraging businesses to take fewer chances on people.